Welcome back to the channel. Today we're diving into the investment strategy of one of the greatest investors of all time, Warren Buffett. This guy's a legend, right? He's built Berkshire Hathaway into this massive conglomerate by making smart, long-term investments. We're going to break down some of the top holdings in Berkshire Hathaway's portfolio, looking at what makes these companies attractive to Buffett and what lessons we can take away as individual investors. Remember, this isn't about getting rich quick, it's about building wealth over time by following the principles of a guy who's proven it can be done. So, grab your notepad, get comfortable, and let's learn from the best. Alright, let's kick things off with Apple, one of Buffett's biggest and most well-known holdings. You might think of Buffett as this old-school value investor who stays away from tech, but Apple throws that idea right out the window. Buffett sees value in Apple's brand loyalty and product quality. Their services generate recurring revenue, making them attractive to long-term investors. Apple is a cash-generating machine, and Buffett loves companies that can reinvest and grow. Plus, they pay dividends, which Buffett loves. Look for companies with strong brands and loyal customers. Next up, we've got Bank of America, a classic example of Buffett's love for the financial sector. One of the things that attracted him to Bank of America was its relatively low price-to-earnings (PE) ratio. This basically means he saw it as undervalued compared to its earnings potential. Bank of America also offers a solid dividend yield. Buffett loves dividends. They're like a bonus payment for simply holding on to a stock. But why Bank of America specifically? Well, Buffett's a big believer in the American economy, and Bank of America is one of the largest banks in the country. He sees it as a well-run institution with a strong market position, and he's betting on its long-term success. The takeaway here? Don't be afraid to invest in what you understand. If you're comfortable with the financial sector, for example, look for opportunities in that space, and always keep an eye out for undervalued companies with solid fundamentals and a history of paying dividends. Now, let's talk about Wells Fargo. Buffett was a longtime investor in Wells Fargo, attracted by its low PE ratio and growth potential. However, Wells Fargo ran into serious trouble with the account fraud scandal. This highlights an important lesson. Even Buffett makes mistakes. No investor is perfect. Companies can stumble. Learn from mistakes and adapt your strategy. Buffett eventually reduced his stake in Wells Fargo. He's not afraid to cut losses when necessary. Diversification is key. Don't put all your eggs in one basket. Even the best investors make mistakes. Alright, let's move on from banks and talk about something a little more refreshing. Coca-Cola. Buffett's been a fan of Coca-Cola for decades. He loves its brand recognition and consistent demand. Coke is everywhere, it's sold in over 200 countries. And it has pricing power. Raise the price by 10 cents, people still buy it. No investment is without risks. The beverage industry faces health concerns, but Buffett believes in Coca-Cola's adaptability. Look for strong brands with global reach and pricing power. These businesses withstand downturns and grow long-term. Next up on our Buffett buffet is American Express. Now, American Express isn't just any credit card company in Buffett's eyes. It's a company with a long history, a strong brand, and a loyal customer base. Buffett's been a supporter of American Express for decades, even during tough times. Remember the financial crisis back in 2008? American Express was hit pretty hard, but Buffett didn't sell. In fact, he doubled down, investing even more in the company. Why? Because he believed in the strength of their brand and the loyalty of their customers. He knew that American Express had weathered storms before and would come out stronger on the other side. What can we learn from this? Don't panic when the market takes a downturn. Instead, look for opportunities to buy into quality companies at a discount. Focus on the long-term potential of a business, not just the short-term fluctuations of the stock market. American Express bounced back, proving once again the power of a resilient brand. Alright, now let's talk about Kraft Heinz. Buffett's investment in Kraft Heinz hasn't exactly been a home run. Kraft Heinz is a massive food company. They own brands like Kraft Cheese, Heinz Ketchup, Oscar Mayer, and more. It's the kind of company that seems like a safe bet, right? People always need to eat. Buffett was drawn to the company's high dividend yield, but things haven't gone as planned. Consumers are looking for healthier options. Kraft Heinz has struggled to keep up. Buffett's still a significant shareholder and known for his patience. The lesson? Not every investment is a winner. Even the best investors make mistakes. Patience is a virtue in investing. Now, we've already talked about Bank of America and Wells Fargo, but Buffett's love for the financial sector doesn't end there. He's also got stakes in a bunch of other financial institutions like US Bancorp, JP Morgan, and even Goldman Sachs. This might seem like he's putting all his eggs in one basket, but remember, diversification is about more than just investing in different industries. It's also about diversifying within those industries. And that's exactly what Buffett's doing here. He's spreading his bets across different types of financial institutions, each with its own strengths and weaknesses. This helps to mitigate risk and ensure that even if one part of the financial sector struggles, his entire portfolio isn't sunk. What can we learn from this? Don't be afraid to invest in what you know. If you understand a particular industry like finance, for example, look for opportunities to diversify within that space. And always be on the lookout for undervalued companies with strong fundamentals. Plus, Buffett's a master at identifying undervalued assets. Alright, now for something a little different. For years, Buffett actually avoided investing in airlines. He saw them as capital-intensive businesses with low profit margins. But, in recent years, he's changed his tune. Buffett now owns stakes in several major airlines including Delta, Southwest, and even American Airlines. So, what changed his mind? Well, the airline industry has undergone significant consolidation in recent years. There are fewer major players, which means less competition and potentially higher profits. Plus, Buffett sees the demand for air travel continuing to grow, especially as the global middle class expands. People want to travel, and airlines are how they're going to do it. The takeaway here? Don't be afraid to adapt your investment strategy as the world changes. What might have been a bad investment in the past could be a great opportunity today. Stay informed, be flexible, and always be on the lookout for new and emerging trends. And there you have it. A closer look at Warren Buffett's top investments in his Berkshire Hathaway portfolio. Remember, we can learn a lot from his strategy of looking for undervalued companies with strong brands, consistent earnings, and the potential for long-term growth. While we can't replicate his success exactly, we can apply his principles to our own investment journeys. Focus on understanding the businesses you invest in, be patient, and don't be afraid to adjust your strategy as needed. If you found this video helpful, make sure to give it a thumbs up and subscribe for more insights into the world of investing. Thanks for watching, and see you next time.